Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about a tiny small cap infrastructure company where HDFC Mutual Fund has acquired 52,31,856 shares amounting to a 2.04% stake in the company. Now this company is trading at very cheap valuations even after its recent run up, and this could well provide an opportunity where a lot of the stocks have got overheated after the recent rally. Also friends, we have recently created a free Telegram channel for our YouTube subscribers. If you want to go ahead and join the channel, please go to the description of this video and click on the link whereby you would automatically get joined. Also friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button and choose all notifications to get updated whenever we upload a new video. Please watch this video to know more about this stock. Now the company in question is PNC Infratech Limited, which is available at Rs 194.90 and the face value for it is 2. The symbol for it is PNC INFRA. Now PNC Infratech Limited is an infrastructure, construction, development and management company. The company is primarily engaged in the areas of infrastructure projects including highways, bridges, flyovers, power transmission lines, airport runways and other infrastructure activities. The company's segments include EPC contract and BOT. Now looking at the 1-year chart, this company had a beautiful uptrend towards the initial part of the year, but since then has been consolidating. The market cap of the company is 4,999.95 crores, which means that this company is a small cap one. The EPS of 19.27 translates into a price to earnings ratio of 10.11, which is dirt cheap when compared with the industry price to earnings ratio of 21.97. The price to book ratio of 2.47 is also decent. The company has a debt to equity of 1.1499, which is a slight concern, whereas the dividend yield is 0.26%. The promoter holding is above average at 56.07%, out of which nothing is pledged. Now friends, this company was comfortably trading at Rs 160, but after a very good set of results, it has rallied to the current figure of 194.90. However, this still is cheaper when compared with its industry peers. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.